Good morning, everybody, and welcome to our Australian market preview for Tuesday, December 8. My name is Carl Capolingua. I'm the market analyst over here at Think Markets. It is a pleasure to be with you as we kick off what will probably be a bit of a quiet start to the day. Before we talk about that and a whole lot more, the Think Markets difference. Hey, breaking news at Think Markets. Boost your investments with 10 free trades. So this has just launched. No opt-in required, $0 a trade. Obviously, see the full terms and conditions, but I tell you what, there are very, very few indeed. It's very straightforward, 10 free trades. Quick account setup, start investing in minutes. Trade anything you want on the ASX, on our cutting-edge mobile platform. Of course, after your 10 free trades defaults to the very, very low rate of $8 a trade anyway, your own holder identification number, and of course, as it says there, unlimited phone support 24/5. The agenda for today, we'll have a quick look at what's going on in terms of COVID in the US, further talks of lockdowns there, quite concerning. Market moves from the last 24 hours. We'll have a look at some charts, of course, bring it closer to home and have a look at some ASX companies, and then finish off by looking at some of the key macroeconomic data. Okay, not looking so good here in terms of the curve for the US, climbing to now 200,000. It seems to be a regular occurrence. Quite concerning European curve coming down. Obviously, we've got a bump in the US post-Thanksgiving, but it's not like we're not in that time of the year, right? We're going to have a Christmas potential bump coming up as well. So quite concerning, as I said, a lot of states considering lockdowns, in particular New York. They're thinking about shutting the whole place down unless case counts start to improve. Australia, China still down the bottom there. That's important. And Japan flattening out as well, although it's hard to see with that graphic. Having a look at some of the moves from the last 24 hours, Aussie markets generally higher yesterday, but I do note the outperformance of tech and materials. That's on the back of the NASDAQ and stronger metals prices respectively. Energy also doing pretty well as energy prices were up yesterday. Staples doing pretty well as well. Metcash had some good results. Otherwise, pretty quiet today. We may see gold and tech also do well. The NASDAQ was up about 0.5% compared to the rest of the market down a little bit. Most of that was Tesla though, so don't read too much into it. You can't read much into it anyway. It's only 0.5% gain. In Asia yesterday, generally lower by about 1%. Europe was lower as well. So not the strongest of leads coming into the Aussie session, but we did see, where is it here, gold and silver up around about 1%, and given base metals were generally better. I'm not saying across the board, copper down a little, aluminium down 1%, but the rest not too bad. So that materials in that tech sector probably will be the better ones today. Not expecting to shoot the lights out, however. Energy prices generally lower, the Australian dollar pulling back ever so slightly as the US dollar index rose, and it is great to see bond yields coming down again. That will give, again, tech stocks quite leveraged to that bond yield story. That will give them some heart. Having a look at the charts from yesterday, very, very small trading sessions, not unusual for this time of the year where we are heading into, that holiday period, and volumes and trading ranges tend to contract a little on US markets. The NASDAQ, that's a nice looking candle at the end though. That looks pretty good. So happy to ride these trends. Short-term uptrend very much intact. Long-term uptrend very much intact. The price action still looks good. Higher peaks, higher troughs. The NASDAQ certainly the pick of those two major US indices. Having a look closer to home, the S&P ASX 200 share price index, they are our futures. They keep trading overnight in response to European and US moves. Overall, the shape of the chart, pretty flat, isn't it? So that would give us a bit of a clue as to how we're going to trade today. We also like to see where we close in terms of the range, at the high or the low, and we're pretty much bang in the middle. So that's the sort of day we're going to have. We're indicating about a 0.2% decline. What I would say, however, if you have these sorts of days where you're expecting them to be flat or down, and you can manage to put in something like this, I'm not saying it's going to happen, but that would be really symbolic of considerable underlying demand in the system. So when you go up, when you don't expect it, that's pretty impressive, because don't forget, if there's going to be a little bit of supply around, And if you're the big funds, and you're down here, you're buying anything that comes around, the best time to do it is when other people are trying to sell. So you're absorbing that demand. You're not having to pay higher prices. If you can go up on a day where you're expecting that supply to come in, we've exhausted all that supply and there's so much demand in the system that we're starting to push to higher prices. I'm not saying it's going to happen today, but watch out for one of those days where you're expecting to be down and you put in one of these amazing performances. Look, overall, short-term uptrend is still very much intact. The long-term uptrend, I'm very happy to say that now. The long-term uptrend, I haven't been able to say it since March of this year. So it's been 6 months since I've been able to say the long-term uptrend on the Australian market is starting to establish itself. We've still got that pressure point here, and then we've got to get up to those old highs. Very interesting, though, that high from yesterday on the knocker, 67.14. So if you don't believe technical levels work, there's one that did, at least one anyway. So almost matching exactly that previous high. And then we came off from there. It was, pretty convincing decline from that level. Okay, dividends today, they'd be the ones with the 0 days next to them. Press pause and see if your stock is on that list. Having a look at some of the broker moves overnight, Citigroup increased their price target on Metcash. I said yesterday, Metcash had some really good results out, and we have seen the price target go from $3.70 to $4 at Citigroup. Jefferies raising their price target from $3.50 to $4. They said that the half one update was better than expected. Earnings beat across all segments, and they see the strong momentum continuing into calendar year 21. Morgan Stanley raised their Metcash price target from $3.80 to $4.15, so nice bump up there. Jefferies lowered their Westpac price target from $15.15 to $15. Now, Jefferies is one of the most bearish brokers on Westpac. I'll just note that also retained an underperform rating. They anticipate higher regulatory costs impacting on margins, and bank appears to be losing market share as well. So pretty bearish from Jefferies. Finally, we've got Citigroup increasing their price target on WiseTech. A nice bump up there, 22.20 to 27.70, but funnily enough, retaining a sell rating. That's how brokers work sometimes. They expect earnings to increase by about 2% for FY21 due to a better than expected recovery in volumes and pickup in rollouts. Okay, having a look at some of the data from the last 24 hours. Yesterday, we saw ANZ job ads come out. They were up 13% from the previous month's 9.4%. Now, that 9.4% was actually revised up to 11.9%. So not only did we have a nice jump in November, October's number was bumped up as well. So that is a pretty good sign, as is the direction of the trend in job ads. So that should be good for our unemployment data going forward. It's good for the local economy. It's good for the stock market as well. So nice to see that print come out. In China, also some pretty strong data for the Chinese economy. We had their external trade balance. So this is their trade with the rest of the world. Let's start with imports. Previously 17, well, nearly 18, now up to 19 and a bit. Exports previously 23.7. That was a pretty big jump there to 26.8. Obviously, the net balance is exports minus imports, and they rose to 75 and some change. Indicates considerable strength in the Chinese economy, but mainly in terms of their manufacturing, their productive side. And it was quite a surprise to see exports rise, considering how bad things are in the rest of the world. So this is China exporting to the rest of the world. But a lot of the analysis is coming through is saying, well, a lot of the manufacturing that was happening in the Western countries, which has been impacted by COVID, has been pivoted back to China. So China taking advantage of that. Amazing that the virus started there, and they're probably, in hindsight now, 6 months into this, 8 months into this, the key beneficiary of the pandemic. Imports did rise, but they were a little bit softer than expected, which indicates that internally the Chinese economy still has some ways to go. Okay, the data out today, pretty quiet. Look, the big one there would be the NAB Business Confidence Survey. And looking overseas tonight, our time, we're going to have not much at all, really. Not much at all. So we'll look forward to some inflation data tomorrow, and then some inflation data later in the week. from the US. Okay, you can catch all of our analysis. There will be more analysis as the day goes on in the market news section of the website. Follow me on Twitter if you like. There's my handle or the Think Markets handle. And of course, you can join me tomorrow for our Think Learning session on how to value a stock. And of course, next week on Monday for our weekly Think Tank. Don't forget that everything we've talked about this morning is general advice. We are an Australian regulated broker. We do have some products that could see you lose more than your deposit. So make sure you read this disclaimer carefully. Or if you need further help on that, give us a call or consult the website for further details. Well, that's it for me this morning. All the best for your trading until we catch up again. Bye-bye for now.